So if you're not getting a voice, I've already written in the chat window what to do. So what is the path to double your capital in 2 years? Obviously through options trading, right? Now, before we know that, all of you write in the chat window quickly, what is your percentage profit for last 1 year in options trading only? What is your percentage profit for last 1 year in options trading only? Do not include anything that, okay, you have doubled your shares, market has gone up and you're also making a lot of money. I'm saying options trading, okay, 3%, 22%, 35%, negative, loss, break even, not done options, 4%, 5%, minus 15%. 30 to 35 is not a right answer. It should be exact. You should tell me exactly 3.9%, 31%, whatever. Okay, great, great. A lot of you have given answer, but a lot of you have not given answer. Right? Okay, let me ask you another thing. What is your percentage profit for last 1 quarter? For last 3 months, what is your percentage profit? It's very important to know that, because what happens? What happens if we do not know our profits? We do not know our losses. All of us know that. Actually, we know that. But when we are making a profit, we want to tell everybody in the world. And when we are not making profit, we are making losses, we want to ignore the figures. Why I am asking these questions? Because if you know these figures, then only we can do something. Because what gets measured gets managed. If you're not measuring, generally what happens, when you're into profit, you're very happy. When you're into loss, you're not telling even your wife that, okay, I'm in loss. You're keeping quiet. You're in a denial mode. You are not at all talking to anybody about your losses. So there may be few stroke of lucks. There may be few good trades which have given you profit. Those trades always occupy our mind. And what is happening in totality? Whether in last 1 year I have made 10%, whether only 4 trades were profitable, but rest of the 25 trades were not so good. What is my net result? We should be very clear about that, because unless and until you measure that, you cannot manage it. We need to measure the results to manage the results. And as a trader, we need to develop ourselves that, okay, even if there is a loss, I should not be in a denial mode. I should face it. You do not become a bad human being if there is a loss. You do not become a bad trader if there is a loss. Don't challenge anything based on these results, right? You may be a very good trader, but then there can be circumstances which have not worked in your favor. So please measure all your results and keep a good control on that, because only then you can try to double your money in 2 years or 3 years or whatever, right? So how much we need to make for doubling our capital in 2 years? For doubling our capital in 2 years, whatever is the result in the past, that is past. Today is the first day of my balance life. So don't worry about what has happened in the past, right? Rule of 72. How many of you know this? Rule of 72 says divide your compounded ROI, you can say rate of interest, return on income, with 72 to get in what time your money will double. Divide your compounded ROI, not simple interest, your compounded ROI with 72 to find out time in which your money will double. I'll give you an example. So if you say you are getting something like 6% per annum, let us say you're putting your money in a bank fixed deposit, you're getting 6% per annum. So 72 divided by 6, it will take 12 years, provided you continuously keep on making it a compound interest. That means, suppose you're starting with 1 lakh rupees. After 1 year, if it is 1,06,000, you are making an FD of 1,06,000. So it's a compound interest, right? Similarly, if you're earning, let's say 12% per annum, so 72 divided by 12, it will take you 6 years to double your money. And it's not about 12% or 6%. 72 is pretty much universal. You can take any figure. Let us say I'm taking 10% per month. not taking 10% per annum, I'm taking 10% per month. Let's say my return on investment is 10% per month. So 70 divided by 10, it will give me 7. It will take me 7.2 months to double my money, right? So a very magical formula, rule of 72. If you are measuring it for a longer period, it will be exactly double. But let us say somebody says, sir, I have 1 lakh rupees. After 1 year, I have made 1,36,000. After next year, again, I have made 36%. So it will not become exactly 2 lakhs. It will become somewhere close to 2 lakhs, right? So now if we want to double our money with rule of 72, so double in 2 years, what does that mean? That means if I divide 72 by 2, I need to make 36% per annum. I need to make 36% per annum, which means I need to make 12. There are 12 months, 36 by 12, 3% per month. If I'm making 3% per month, I will be able to double my capital in 2 years. Or if I'm not able to make 3%, let's say I'm making 2% per month, it means I'm making 24%, 72 divided by 24, that means I will be able to double my capital in 3 years. Now, all of you tell me 3% per month, is it very difficult or it's very easy? Or it's a cakewalk? Or it's walking on coal, burning coal? If it is easy, that means all of you are doubling your money from last 2 years. All of you have doubled your money in last 2 years. Okay, many of you are saying we are TOS students, that's why we are able to do. That's good. It's possible, it's doable, it's not easy. Definitely it's not a cakewalk, right? Thanks for your replies. Great. So what is stopping us to make such returns? What is stopping us? Give me your number one reason. What is stopping you to make such returns? Okay, number one reason from first candidate, I got consistency. FOMO, fear of missing out. Okay, greed. Wow, position size. Okay, what else? So FOMO, greed, all of these are okay. Third is emotions. All of these are indisciplined. Great participants. No proper plan. These are all your internal reasons. Somebody says wrong strategy, somebody says volatility, low risk taking ability. Again, internal reasons. Some of the reasons are external. First reason definitely is volatile markets. Markets are not in anybody's control. So we cannot control the markets, but we can control our trades. We can definitely take care of volatile markets with proper guidance. Lack of knowledge, as somebody is saying, yes, lack of knowledge, lack of proper guidance. These are two major reasons. Now, volatile markets can be handled with proper guidance. But what cannot be handled even after proper guidance? It is greed. How greed is stopping you? You can ask me this question. How greed is stopping me to make more money? Greed means I will make more money, right or not? So there are different kinds of greeds. Greeds is that, okay, you know what is stop loss, but what is stop profit? Do you know that, okay, at this amount of profit, I need to close the trade? The trade which is profitable at 10 a.m. in the morning becomes a losing trade at 11 a.m. in the morning. Just half an hour, 15 minutes, it takes for markets to change your trade from a profitable trade to a losing trade. So that time the greed is in play. You know, I want only 3% per month. I'm already making 3%, although it's just the third or fourth day of the market, but I am not closing the trade. Isn't it greed? Yes or no? Greed means you're making a profit and you're not booking that profit. You're looking for much more. You're trying to make a killing. You don't want one golden egg from the goose. You want all the eggs in one day, right? Distraction, noise. There's so much noise in our minds that, okay, shall I do this? Shall I do Banknifty? Shall I buy some stock? Shall I do some trade recommended by this channel? They are recommending 30 trades. Let me do at least 25 trades. Lot of distraction, lot of noise is there. When I became a full-time trader, I wanted to prove myself that, okay, I'm really good. So I try to do everything possible, whether it is options, whether it's fundamental, whether it's technical analysis, whether there is some recommendation by newspaper, some recommendation by website, some recommendation by TV channels. And let me tell you, let me share with you that within 3 to 6 months, I was a mad. I almost became mad. I said, no, this is not possible. Either there can be focus or there can be noise in your mind. Both the things cannot coexist. Either I have noise in my mind, either I have focus in my mind. So I do not want to distract myself. I removed everything from my trades. I said, okay, now I will be trading only option strategies. I will be trading option strategies only in Nifty. I'm least bothered what is happening to results. I'm least bothered whether Banknifty is giving me great results. I'm least bothered whether any result trade is giving me huge profit. No, let me be pretty much focused. And if I am focused, obviously the results will come. Right? So when it comes to option trading strategies, there are two kinds of strategies. One is long term, another is short term. Long term, I'll explain what are long term strategies. I'll also explain what is a short term strategy. Short term, in my case, it's not a weekly strategy, it's always a monthly strategy. You can use same capital for both to generate that magical 36% return. Why magical 36%? What is the meaning of 36% returns? 36% means yes. Some of you are not able to hear. Log off and log in again if not audible. Just hold on. 36% means we want to double it in 2 years. So how can we do that? We have to do two sets of strategies. One is long term. How much return the long term strategy will give? How much return the short term strategies? We need to extract how much money from the short term strategies. Let us see that, right? Let's see that. Step number one is a long term strategy. What is a long term strategy? Covered call. And which underlying you will use for covered call? Write it quickly. Which underlying you should use for covered call? I am looking for 12 to 20% return. Whatever happens to the market, whether market stands down, whether market goes up, whether market remains here only. Exactly. There are so many existing candidates. They know most of the answers. That's great. 12 to 20% returns. You can make it if you do a covered call in Nifty. Doing a covered call in Nifty means even if market tanks down by 25% from here, you are safe. That is not possible in any stock, right? So your first move is that, okay, let me set the ball rolling by doing a covered call in Nifty. Definitely there will be some challenges for all of you who are new to this. What to do when market tanks down? Market had gone from 12,400 to almost 7,500. That time also covered call never gave us any loss. What to do when market sharply goes up? I have purchased Nifty and I have sold a call of 17,000 and market is now standing at 17,500. Is there any possibility of doing anything? When to do the adjustments and what should be the adjustment? So this is the first step in your option trading journey. If you want to make your money double in 2 years, 12 to 24% you should be looking from long-term strategy where you are not required to monitor it on day-to-day basis. You will be doing it only on monthly basis, and you are not doing it for 2 months, 3 months. You are doing it for next 5 years, 10 years. You're not here in the market for very short period of time. You cannot judge your capabilities maybe in 6 months. You may be a very good trader, but because your last 3 months results are not so good, you are thinking you are not capable of trading this market. That's not true. So long-term covered call, you should get all these answers and you should set the ball rolling. I am saying this is one trade in a month. Only once you need to come to the markets and adjust your trade, and you're good to get 12 to 24%, and your 50% job is done. Remember how much money we want. We want 36%. The same capital, whatever I'm using in covered call, I will be buying Nifty, right? So I will be pledging that money. I will be pledging those stocks to my broker and taking away 80 to 90% of margin. So same money I will be using for short-term strategies also. It's not that, okay, for covered call, I'm keeping 50% of my money, and for balanced short-term trades, I need different money. No, then the returns will not add up, right? So you get 80 to 90% as a margin for your Nifty covered call, which we will be using for our step 2. What is step 2? Step 2 is short-term strategies. Short-term strategies do not mean intraday strategies. Short-term strategies do not mean weekly strategies. So once I know already I have, let's say, 20% in my hands, how much more do I want? How much more do I want? Tell me quickly. Okay, if I say 20% out of 36, you subtract 20, 16%. If I made 24%, I need only 12%. 12% means what? 1% a month. If I make 18%, I need 18% from step 2. 18% means 1.5%. Right? Has my job become slightly easier? Yes or no? Is it easy to make 1.5% from market per month, or it is easier to make 3% per month? Which one is better? Is it easier to make 1.5% or difficult compared to 3%? 1.5%. Obviously, you need to take much lesser risk. So step 2 is you will do short-term option trading strategies. When we say short-term, and obviously we are talking about monthly strategies. So these monthly strategies, although I need 16%, I will be playing for something like 18 to 30%. I'm happy if I make more than 36%, right? There is no ceiling. But yes, I should try for 36%. So maybe 12 to 24% I will make in my long-term strategy. I'll do a covered call. That is the first step. I'll pledge all the money and then start trading on monthly basis in short-term strategies. Aim is to make 1.5 to 2% per month from here also. So what kind of monthly strategies? What kind of monthly strategies? Again, it's a question of managing your risk. If you're into monthly strategies where you're taking too much of risk, what will happen? You're bound to lose. 3 months you will make money, 3 months you will make 5%. Fourth month you will lose 25%. All the profit gone. Has this happened with any of you? You have made a consistent profit for 2-3 months. Fourth month you have scaled up the trade, and fourth month is a bad month. So we need to absorb the profits. Means I am not going to take any extra risk because I require only 1.5 to 2%. I can always create very low risk or no risk kind of trades, and the strategies wherein I can do that is iron condors or condors, iron butterflies, calendar or double calendar spreads, diagonal and double diagonal spreads, and if required, short strangles also. There are different things in the market when you require different environments in the market, when you require calendar spreads, when you require iron condors, and when you require maybe strangles also. I'll show you, I'll give you a ready reckoner for that. Right? So are we clear? We have 2 steps. First, I need to take a long-term strategy. Long-term strategy is for what duration? At least 1 year. Right? Short-term strategies are monthly strategies, and this will ensure that pathway towards 36% is not that difficult. I have already broken down into some pieces. Now, is it very easy to make this 1.5% through these strategies? I'll say no. You need to be really good in these strategies so that consistency matters, so that consistently you are able to do that. What is this? What is this? 90 is to 10. Your quick answers. What do we mean by 90:10? Losers versus gainers, POP, probability of profit, 10% winners. You see, 90% people make money and 10% people, sorry, 90% people lose money and 10% people make money equivalent to what 90% people lose, right? So odds of making money are in favor of you or odds of making money are against you? Tell me. If odds of making money are against you, write A, against. Because 90% are going to lose money, whether we like it or not. Now, when the odds of making money are only 10%, when odds of making money are against us in the ratio 90:10, after that, do we have any scope of committing mistakes? Do we have any scope of trading these markets very casually? If you say, okay, my chances of success are only 10% and I will do some mistakes also, I will be in meetings also, market will be going here and there also, I will be missing my adjustments also, I am not very clear about the strategy also, then what will be the odds? Odds will be almost 99.99 is to 0.01. Yes or no? Already odds are not in my favor. It's not a business where everybody is successful. Only 10% people are making money. And in that also, I want a lot of leverages. I want, no, I'm not a full-time trader. No, I don't understand many things. I do not have sufficient funds. I do not know the adjustment. I do not have any plans. Then chances of success over a longer period of time, you may be having sparks of success, right? Maybe in 1 month you are making 10%, second month you are making 5%. But then over a longer period, check what you have done in last 1 year. Check what you have done in last 2 years. Are you a one trade story? Like there's so many movie stars. They say, okay, they're one movie star, right? So one of the movies is successful. What after that? Similarly, in your trading journey, there may be few trades which are very successful, but most of the other trades may not be because odds of making money are not in your favor. So that is why focused approach for any strategy is must. I've already written 8-10 strategies. I've shown you, okay, what is covered call, what are the short-term strategies. But focused approach for strategy is must. I'll show you one example how you can focus on. Let us say you just choose any particular strategy and what should be your focus. Let me give you one example. Let us say you have decided that, okay, my 20% will be coming through my long-term strategy and 16 to 20% I will try through one of the strategies which is very safe, iron condors. Now, just by knowing iron condors, we may not be able to do that, right? So first thing I should know, as long as VIX is above 15, 16, good trades in iron condor will be available. But if the VIX is less than 14, 15, iron condor may not be a great strategy. And what are the challenges? I should know everything before entering the trade. After entering the trade, things are not in my control. So before entering the trade, I should know all these answers. What should be the width of the trade? I'll give you one example. What should be the risk reward when I'm initiating the trade? If you are initiating the trade which is not 1:1, then you're taking too much of risk. When should the adjustments be done? What should be the adjustments? And then you have different variants of iron condor. Can you use that? Can you use them as independent trades or can you use them as matching trades, combo trades with iron condors? They are jade lizard, they are modified iron condors, they are condors. If you answer all these questions, then you're good to go for generating 2 to 3% monthly returns. Everything falls in place. But I do not know these answers. I just know that, okay, yes, there is something known as iron condor. But what about the focus? What about the details? That is more important, right? If you know all these answers, yes, go ahead and put your money on iron condors. You are very good to go. Even if you earn 2%, that is 24%, 20% from covered call, you are good to go for 44%. You will not double your money in 2 years. You will double your money in less than 2 years. Let me tell you. but then do not trade casually. If I give you one example, this is a morning trade. This is an example of iron condor, where what you have done, you have sold one put, you have purchased a lower put, you have sold one call, you have purchased a higher call. So here the risk reward is slightly less than 1 is to 1 is 1 is to 0.86. 40,000 rupees are required and you can make 8.54. But I am looking for how much? 2 to 3%. So as soon as I get my 2 to 3%, 2% of 40,000 rupees is 800 rupees. 3% of 40,000 rupees is 1200 rupees, 1300 rupees, 1400 rupees. Once I get that, I should leave the trade. That time I should not be greedy that no, let me make a killing, and that killing will kill my trade. Right? So when will I do the adjustment? What adjustment I will do? So maybe I will do an adjustment when market touches 15,800. I can do the adjustment when market touches the upper break-even point. How many break-even points are there? Most of you understand these things. How many break-even points are there in this? 2. Okay, all of you, many of you have written 2. And if you do not know, please write I don't know, right? So that I can explain. Let me give you a small ready reckoner, right, which you can use when to use which strategy to make 2 to 3%. The second half of the game plan. There is a plan. We have made a plan, and then we will work to that plan, right? Work out a plan and then plan to that work, or plan out something and then work according to that plan. That is the main thing. So second thing, which is short-term strategies, this is the most dangerous thing. I'm giving you a small ready reckoner. Let me see how many of you can understand this. See this, and I'm giving an opportunity to go through that and ask me some questions on this if you have. I've given you what is the VIX range. At that VIX range, what kind of strategy you should be doing? What is the margin required in that? What is 2% of that margin? What is the adjustment margin if you need to do adjustment in that? And what will be the profit, 2% profit, post adjustment margin? If we are including, obviously we need to include adjustment margin also. This is a broad ready reckoner which you can use for your trading, for initiating the trade. That okay, VIX, let me see the VIX. VIX is around 23. So let me go for iron butterfly. This is the kind of margin required, and 2% profit is 1.2k only. As soon as I touch 1.2k, I should definitely get out of the trade. If I'm keeping some adjustment margin, which is 20k, how this will be used? Only when you learn adjustments, you will come to know what is this 20k. And then if I keep this money 20,000 and let us say 60,000, 60 plus 20 is 80,000, so 2% post adjustment margin, because obviously you have to make provisions for that, it will be 1.6k. It's not that difficult. If you're clear in your thought process, it is not that difficult. Similarly, let us say VIX goes to 13. You may not get good iron condor trades. What are good iron condor trades? Where the width is quite wide and still you are making 1:1 risk reward ratio. So if the VIX is above 15, 16, 17, 18, you will get those trades. Otherwise, you will not get those trades. You cannot force the trades on the market. Based on the market situation, based on the market environment, you have to pick your trades very wisely. You have to pick your battles very wisely. Pick those battles wherein chances of your success are high. Right? Cash to collateral margin is not 50%. Cash to collateral margin is still 10%. If your broker is asking for 50%, change the broker. That is at the broker level, right? That is not at the terminal level. It's only 10%. Clear? Any questions on this? Any questions on whatever we have done so far? And you might have raised some questions which I am not able to answer. So maybe you need to ask it again. Okay, let me, oh, it's moving very fast. Be slow in asking the questions. How do we do covered call on Nifty index? Can we pledge Nifty futures? You're not going to do it in Nifty futures. Obviously, you cannot pledge Nifty futures. You need to buy exchange traded funds, ETF. Zerodha strictly 50%. Are we restricted to Zerodha? You can try somewhere else. You're not married to Zerodha, right? If TradeGenie says 50-50, talk to them. And even if it is 50-50, you need to work out that, okay, how much more money you want. And accordingly, you need more returns. Right? Effective May, the cash to call rate is 50%. Correct? Not correct. That was the circular, but that was not the circular at the client level. Without covered call, what will be the time to double the investment? You subtract that. If you're making 20%, 72 divided by 20%, you have the answer. But why not? Why should I keep only cash margin with my broker? Why not a covered call? Which broker is best? See, the broker who gives you 10 to 90% margin for 10% cash, that is best for you. Right? If you buy ETF and pledge use margin, so how much you require for selling call option? Only one call option will be 70,000, and your Nifty ETF will be worth how much? Right? So you have to find out a way. Tomorrow, even if they make it 50-50, still you need 50% extra. Then we will say, okay, instead of 10 lakhs, maybe I need 14 lakhs. On 14 lakhs, how to double it? What is the kind of return I want? Accordingly, you need to reset everything. Right? I am using TradeGenie. I'm using TradeGenie. I'm using ShareCon. At least TradeGenie, we are getting that margin of 90%, 10 to 90% cash versus margin ratio. Right? Since what is it? Once the position is taken, the question is all cash and collateral get blocked. When Nifty goes down to level, what I want to buy, I couldn't buy. Is there any way to buy? So who is telling you to trade in 100% of your margins? That is the problem. You cannot trade in 100% of margins. There are some games. Are you seeing this? What is this adjustment margin? This is the extra margin you keep. You are not trading in a bank fixed deposit. You're trading in markets. Right? You're trading in a market. You cannot say that, okay, if I have 5 lakhs, all 4,99,000 should be invested. No, there will be periods when even 2 lakhs is not invested. After closing iron condor at 2%, do we move to next month or make another position in the same month? Why will you make another position in the same month? Use it for something else or don't use it. Not trading is also a decision, right? Because when you are into a trade, there can be a totally different result also. Whatever you have made 2%, you can lose 2% in the new trade. So if you made your targets, you can try to improve it by a little bit, but don't try to do it with all the money. If you're working in a job, you're getting 2 lakh rupees a month. On 7th day, your boss says, Mr. So-and-so, you have done your monthly work. Now you need not work for next 23 days. Take your salary. Will you say, no, I will not take my salary. I'll work for 30 days only. Then I will take my salary. So if market is obliging you, giving you 2% in first week or first 2 weeks, take it and sit quietly. Focus on something else. But broad focus is, yes, I need to ensure I'm making that magical figure of 36% every year. Many of you will say, no, what about taxes? So there will always be a devil's advocate, right? You'll say, what about taxes? Even if you earn 1%, taxes will still be there. What about brokerages? You have to take care of that. Right? So as a trader, what we need to know, especially in these short-term strategies as well as in long-term strategies. we need to know the framework. We need to know the framework of creating the strategy. Creating a strategy is easy. Anybody can do that. Adjusting the strategy. I have taken the trade. Things are obviously moving in some direction. How will I adjust? And then as exiting the trade, as you asked, if I'm making 2%, yes, exit. Do not become Abhimanyu. You are creating the strategy, you are entering the Chakravyuh, you are fighting with others, you are adjusting your strategy, but you do not know how to exit. You cannot become Abhimanyu in all the trades. You have done everything right, but you are not exiting the trade, and ultimately market is taking control of the results. So you must be very clear if you want to use covered call, how to create, how to adjust, when to exit, how to exit. If you are doing iron condor, how to create, what are the rules for creation, whether I should do it right now or not, whether I should adjust, at what time I should adjust, and when should I exit. Once you know this framework, then it's a repetitive work which can be done again and again, again and again, again and again, with somewhat different results. Sometimes you will be making 1.8%, sometimes you will be making 2.2%. But then results will be very similar once you know the framework. Once you know the framework, then do back testing. Do it for 2 months, 3 months, 2 years, 4 years. See that, okay, whether my framework is good or not. I am putting my real hard-earned money into this. And once you know that, yes, everything is in control, let me do a paper trade for 1 month. Right? You see, we are talking about making money from markets. It's not easy. It's as if you're taking away money from the wolf's mouth, taking away meat from wolf's mouth. It's not easy. And if we feel that, okay, this is a low-hanging fruit, I think we are mistaken. Do this. And once you are confirmed, then go with your real trades. This is the process you need to follow. Even if you do it for one strategy, that will create a lot of a difference in your financial wealth. All of you know, you see, hope all of you know the value of 36%. If you are a person who understands this 36%, yes, when I was into a job, I never knew the value of 3% per month. Somebody say, okay, we'll give you 3% per month. I said, oh, it's too low. Because I'm on the other side, I do not know how the business works. Right? Is 3% a good rational profit? Is 3% expectation, or it's very low? Please write in the chat window. Is it very low, or it's good or bad? Good, reasonable, rational, very good. So that means, you see, again, who are those 90% people? The 10% people who are making money are very, very conservative. They are very rational in their expectations. And 90% of people who are losing money, they are hugely irrational in their expectations. They want 20% return. They want 100% return. Right? And you increase your expectation, and you are in a 90% group. Undoubtedly, that is a short recipe for failure. Who doesn't like money? Everybody says, okay, give me 100%. I'm very happy. But whether that's possible, that's not possible. Right? And the way the wealth grows when you're able to double everything in 2 years, it's unimaginable. As I said, you are not in the markets for 2 months. You are in the market for next 10 years. And in next 10 years, if you're able to make your wealth double 5 times, so even if you start with 10 lakh rupees, what will be the wealth after 10 years? And you're doubling it every second year. Let me see who can calculate it fast. So after 2 years, it will be 20 lakhs. After 4 years, 40 lakhs. After 6 years, 80 lakhs. After 8 years, 1.6 crore. And after 10 years, 3.2 crores. Tell me any other business where you invest 10 lakh rupees now, and after 10 years, it will be 3.2 crores. Yes, you need to take care of government. Yes, I am not government. Taxation you have to take care of. That's okay. If you're making money, why you're bothered about tax? If you're not making money, you should be bothered, right? So make it very clear in your mind, whatever trades you are doing, whatever strategies you are doing, are you clear what I am doing? That is the whole purpose of this webinar also. All of you, I'm thankful to you for joining our uh, app, and we will be conducting one webinar every month. Only problem is we can accommodate only 100 people. 98 people are there. There were more than 121 people who enrolled, but maybe some of them are not able to join because our capacity is this only, right? So they said focus and noise cannot coexist. Either you are focused or there is a lot of noise in our mind. We have a 2 days workshop module where we cover basics, in which we tell you what is basic mechanism, OI analysis, what are the factors affecting price, buying versus selling, which is better, Greeks, what is the meaning of Greeks, what is the case study, when to use, when not to use. And then we have strategies, 2 leg strategies, 4 leg strategies, long-term strategy, monthly strategies, where we are trying to answer all these things. We are showing you adjustments, we are showing you back testing, and then we are telling you what is toss wealth cycle. Can you set the ball rolling by using toss? Toss means the option school wealth cycle. So all these things we cover in our 2 days workshop, and after that we handhold you for 1 month with WhatsApp group. We handhold you through email for 1 year. You can ask your questions up to 1 year. We will be sharing the material of the workshop, which is there with you forever. And this is one of the most comprehensive understanding of options trading. Be the chess player, not the chess piece. Whether you are able to game the market or whether you are getting gamed by the market, remember 90:10 are the odds. So you need to become the chess player, not the chess piece. Your current knowledge may be guarding your ignorance. Let me tell you, this was one of my friends from Punjab, and he said, okay, I know everything. I know what is call, I know what is put. What will you teach me? And when I asked him few questions, he had no answers. But then in his understanding, he knows everything. You do not know what you don't know. Your current knowledge may be guarding your ignorance. Maybe you're thinking that this is the world. Your current knowledge may be stopping you to learn